মাছ দেখ, ও বাবা। Hi, today I've come on live to discuss certain aspects of finalization of accounts. Let's explain to you in brief. This is only for persons who have passed their graduation in commerce and then opting for uh, masters, either in a masters in commerce or have entered into a professional examination course. It may be chartered, it may be ICWAI, now ICMI, or company sector. Internal audit is a must for medium-sized business having turnover greater than 40 lakhs. Now, uh, there are other parameters of the size of the business, like number of employees employed, number of employees employed in the business, and having what are the size of the business, considering the various business verticals. Now, these internal audits are generally carried out by the management from time to time. Upon the end of each quarter, these are carried out by the management, fulfilling the major policies of the organization, having its mission, which are which are mainly focused on internal check and proper internal control of the organization. Let's come to the finalization of accounts at the year end. Why finalization is necessary? And basically, this question arises to everyone. Why finalization is everyone is necessary? Quarterly closing is there for every organization or half yearly closing. But why it is necessary? It is necessary because at the year end, if it is if it's having it's compulsory for tax audit as per Income Tax Act 1961, it has to have, it must have statutory audits. Why statutory audits? And what is a statutory audit? Statutory audits are being performed just after the finalization of accounts and internal audits are being performed. These are placed at the annual general body meeting for adoption of the accounts and recommendation of dividend, and certainly the agenda for the next year and what are the pivotal financial performance. So let's go back to the basic reason of finalization. At the year end, there are many accruals. There are many accruals which are really necessary to be taken into account, which might have the expenses might has not been taken into account, but these are supposed to be considered as an outstanding expenses or being shown in the balance sheet as current liabilities and provisions. It may be pertaining to facilities expenses, or it may be pertaining to rental expenses, it may be pertaining to electricity expenses of the organization or the factory. Because all organizations may not have a factory, which the organizations which are manufacturing organizations have a factory. And these organizations have their salary outstanding at the year end, have the all statutory payments outstanding, because generally very few organizations pay these type of expenses in advance at the year end, because it's not possible that at the close of the month the entire wages and salaries, wages of the factory, that is of the workers, and salaries of the other basic, these are all indirect overheads. These are being taken into account as accruals and being shown in the balance sheet as current liabilities. So these all form part of accrual expenses. Now let's come to the income part. At the year end, what happened? At the year end, basically the income which has not accrued but is sure to arise after the end of the balance sheet date, as per accounting standard, are not likely to be taken into account. But those incomes which have documentary proof, like say for example, a sale has taken place. The sale which has taken place, that we have received an order, we have confirmed the customer, or the customer is a multi-level organization, not an individual purposely, and the order has been convened and accepted, and acceptance and conversations has been going on for say 10 days before the end of the balance sheet date, but it has not actually occurred. It has not actually occurred. So what happens in those cases? In those type of cases, the incomes are basically taken into account as incomes with a note in the balance sheet that which may arise after the end of the balance sheet date, because say after 31st March, say on 2nd April, the dispatch from the factory or from the organization has taken place. Let's come to the now come to the asset. What are the types of asset? Current assets, non-current assets. Current assets are those assets which has liquidity issues. Non-current assets are those assets which has no liquidity issues. No liquidity issues means it has basically the which are non-current assets. Intangible assets, land and building, plant and machinery. Say at the year end, there is an addition to the plant and machinery, major change in the plant and machinery, which can increase the production facility or production capacity of the plant. In those cases, it is necessary to capitalize. Obviously, the organization will look into those aspects, like when those expenses have been incurred and it has virtually or actually increased the production capacity of the organization. If it has not been put to use, it cannot be capitalized. This is as per accounting standard 10 issued by IC and other accounting guidelines as issued by several bodies time to time. Now let's come to the point of long-term liabilities. Come to the aspect of how to finalize this after. Oh, sorry, I have basically omitted the depreciation schedule. These are being considered as per a fixed asset schedule is prepared and which are being updated at the end of the year. This fixed asset schedule along with the fixed asset depreciation schedule are being compiled and they are being reflected in the balance sheet. Now let's come to the long-term liabilities. How long-term liabilities are being used? Long-term borrowings, long-term, what are long-term? Long-term borrowings are those borrowings, it may be treated as long-term loan. Suppose an organization has taken a loan of say 1 crore or 50 lakhs from a financial institution or from a major consortium of bank for a project which has to be executed in the near future. Obviously, the loans taken by the organization from the banks or financial institution has to be within the balance sheet date, that is 31st March of each year. Now, it may be so that the loan proposal has been initiated. Actually, the loan was disbursed in the year after the balance sheet date. Then, in those cases, if the funds are not available by the company within the balance sheet date, the company and the auditor, internal auditor, along with the statutory auditor, will decide that with a notes and accounts that these long-term loans, with a notes on account that these long-term loans have been taken, which the agreement has been entered, but actually loan disbursed is after the balance sheet date. In those cases, it depends on the organization, because accordingly the organization can start the project for which purpose the loan has been granted, but loan has been taken. Accordingly, the amortization schedule is also prepared by the bank and has been submitted and received and accorded by both the organization and the bank. So these are basically some nitty-gritties of finalization of accounts pertaining to let's come to the point of discussion for what are short-term borrowings. Short-term borrowings, long-term borrowings, I have not said long-term loan. What is the tenure of the long-term loan? I have missed out. The tenure of long-term loans is basically say for a period of the project period, say for a period of 5 to 10 years. It may be more than that, but depending on the gestation period of the project. Our next discussion will be on short-term borrowings and how we will discuss how we will finally consolidate the accounts. It's basically a major know-how on how to finalize. My next discussion will be on the consolidation part, and then I will also discuss with you the possible aspects or possible points of income tax while finalization of accounts. These are also very important. Thank you.